Here to keep your portfolio thumping no matter what happens with rates are James Shelton, Chief Investment Officer of the Canali Trust, and Tom Lydon, President of Global Trends Investment and author of the ETF Trend, following the playbook there, ETF Trend. And so, you know, Tom, look, you continue to be bullish, but is the earnings season playing out as you would like it to?
Well, it's actually been surprisingly great, Liz. There have been 6-to-1s as far as beats to those that have fallen short. So, yes, we have a little bit of negative news today, but also we've got a correction that many have been waiting for months. We've had a huge run in the last 7 months, and those that have been nervous and on the sidelines waiting for an opportunity to get in, this might just be that opportunity.
James, what does happen if the Fed decides to raise rates? I mean, a lot of people are saying that, you know, that could kill any kind of a rally. Other people are saying that, you know, the market would like to see some discipline established at the Fed. What do you say?
I'd love to see some discipline established at the Fed. I don't think we're going to get it for quite some time. There might be some little change in the statement to indicate that they're getting ready there, but I think it's much too soon. You know, this economy has been supported by the government and all this stimulus, and all you got to do is look at home sales and see what the expiration of the home buyers tax credit is doing to that market to say that, you know, if the Fed tightens up, then this recovery is definitely in jeopardy, although, quite frankly, we would like to see the Fed start to make moves in that direction, because I think it's dangerous to continue to let the dollar be debased the way it has over the last several months.
You know, just to put it into perspective, the New York Fed advisor, Wolford, is not exactly a big, powerful voice here, but right now the market has just lost more steam. It's down 98 points. But I'm wondering, wouldn't Tom, the markets enjoy the fact that, yeah, maybe we are seeing a stabilization here that warrants higher rates? You saw the cover story of Barron's a weekend or two ago.
Right. Well, you know, I think we're still in an environment where they're going to let the dollar go lower. And as investors, we need to protect against that. So as we have maybe a buying opportunity here, let's look overseas. Let's look at emerging markets. Let's look at currency ETFs to protect our purchasing power. Because there are areas, there are sectors like housing, like financials, that may get worse before they get better. But as investors, we have choices, and there are a huge amount of choices out there.
Well, James, on a day when the NASDAQ is down about 2.5%, is now the time to dip in on the dip in the NASDAQ, or is this a big pullback?
I suspect that what we're getting right now is a shallow correction like we've seen over the last several months. Goes down 5–6%, and then the cash that's on the sidelines that has missed the rally is going in and buying. I suspect that we're close to that point. However, I would say that somewhere around 1040 to 1050 on the S&P 500, which represents kind of the uptrend line going back to March of '09, that if we move below that in a decisive manner on heavy volume, I'd be tempted to sit back and wait and see how this plays out.
Well, Tom Lydon, you know, it was 10 years ago when the Dow first crossed 10,000. What a difference 10 years makes. For somebody like you, we have a picture, actually, from when you were 10 years
that's not
younger.
fair.
Look at him now.
That's my membership to Hair Club for Men ran out. And
well, guess what? You have your chance to reverse it all, because we're well below 10,000 right now at 9,782. All right. Thanks, gentlemen. Good to see you.
Thanks, guys. It's very fashionable, we should say, to have a haircut like that. Thank you very much. Good to see you both.
Let's go back to